What up, HyperChange? Welcome to another episode. Today, we're gonna walk through my financial model for Tesla. So now that I've had some time to digest Tesla's Q1 earnings, I went through, updated my whole model, have a ton to share. Let's get right into it. The first thing and most important metric that I track for Tesla to understand how the business is evolving is their annual vehicle deliveries. How many cars are they selling per year? This is their main product, their main revenue driver. And I think this is the backbone of every financial model for Tesla. So as you can see, their vehicles delivered have gone from 3,000 to over 100,000 in just 5 years since they started selling the Model S. And here is what I'm projecting for the next 6 years. Although that growth did look tremendous, it's going to get dwarfed by what I think Tesla can do over the next 6 years. As you can see, my model has Tesla scaling from 100,000 units per year to over 2.1 million cars sold by 2024. This is on the back of things like the Model 3, the Model Y, the Tesla semi-truck, potentially the Tesla pickup truck. So I think there's a ton to get excited about with Tesla's future product pipeline. My model has Tesla crossing the 500,000 unit per year delivery mark in 2019, which is a year earlier than they had originally anticipated, 2020, but a year later than their, revamped estimate of 2018. Either way, I think crossing 500,000 deliveries by 2019 will be a phenomenal milestone from the company. In terms of the financials, this is what Tesla has looked like so far, with revenue going from 0.1 billion to 11.8 billion since the IPO. Operating losses, though, have grown as well. For the next 6 years, I'm expecting Tesla to continue to grow revenue significantly, going up more than 10x from that 12 billion number to about over 174 billion in 2024. My model has the company turning profitable starting in 2019 and then growing earnings from there. This is a really cool metric that I like to throw in there just to give you some perspective. Tesla's current valuation is about 50 billion. So on the chart, that's where the 50 billion line would be. And as you can see, the financials look very, very tiny compared to that for what we've done in the past. But for the future, if Tesla can execute on these revenue and profit projections that I'm showing, I think that $50 billion valuation looks very, very cheap for a company that could be doing over 20 billion in earnings 6 years down the road. Now let's go to the Google Doc to get our hands dirty and see what's going on under the hood. This is my operating model for Tesla. I'm going to put a link in the description so you guys can check it out for yourselves. You can even download it, tweak the assumptions, and make your own Tesla model. So I have a ton of fun with that. The most important thing to start here is we're going to move over to the auto revenue tab. And this basically estimates how many cars Tesla is selling per year. Once again, I think this is the most important number to try and estimate how Tesla's business is doing. Model S units sold, they sold about almost 55,000 last year. And I think, the Model S and Model X have sort of reached a plateau in terms of demand, not because they're not great products. They have actually done a tremendous job in terms of market share, but just because there's not that many people that can afford to buy $100,000 cars. So that is what it is. That's not the exciting part of the business. Where it gets fun here is Model 3. So Model 3 sold about 1,770 units in 2017. For 2018, I'm expecting just over 140,000 units. Now you may be asking, how did I get to this number? Well, for Q1, we know that Tesla delivered 8,180 cars. For Q2, I am expecting deliveries of 22,000 units. This assumes deliveries of 2,000 per week for 11 weeks with 1 week off during the quarter. For Q3, I'm assuming the same thing, but 4,000 a week. For Q4, the same thing, but 6,000 a week. Now remember, Tesla said they would be hitting production of 5,000 Model 3s per week by the end of Q2. I'm only averaging 4,000 per week through Q3. So these numbers are very, very conservative relative to what Tesla is telling us. And that's just because, it's better to be conservative than aggressive in these models, just so you always have some wiggle room for error. So that is how I'm thinking Model 3 deliveries will trend for the rest of the year. In terms of moving to 2019 and beyond, the demand for Model 3, in my opinion, is going to be well above 500,000 cars per year and actually perhaps be closer to 700,000 cars per year, which is something Elon Musk has alluded to. Some of the data backing that up is there's about 850,000 small and mid-size luxury sedans that are sold each year in the US. If the Model 3 can get about 30% market share of that, that'd be sales of 250,000 units in the US alone. Globally, that translates to about 700,000, if not more, kind of depending on how well Tesla does in China. And you may be saying wow, 30% market share for Model 3, they're never going to get that. That's crazy. Well, in fact, Model S has above 30% market share in its segment, just gauging by the initial demand of Model 3 and how it's impacting the sales of the BMW 3 Series and E-Class already. I think that the 700,000 number is about right, but if you have a different idea, please let me know in the comments below. Moving on to the semi-truck. Now this is, I put out a ton of videos on this before, but basically here I have them just starting deliveries in 2019 and then ramping up to 100,000 by 2024. Now Elon Musk has guided that production of the semi-truck will be about 100,000 units per year in about 4 years, maybe even a little higher. So that's sort of my guiding philosophy behind this line. In terms of the Roadster, this is pretty straightforward, just assuming that, at maturity, they're going to be selling about 2,000 of those per year. In terms of the Model Y, this is another really fun product for Tesla. I had them starting production in 2021, just at the very end of the year with 10,000 units. Remember, Elon Musk has said they should start production about 24 months from the last conference call, which would be about spring 2020. So I'm giving them a huge cushion there, but I do have that ramping quickly from about 10,000 to about 700,000 units in about 2 years. Why did I pick 700,000? Because it's about in line with Model 3. Additionally, the crossover utility market is actually bigger than the sedan market. So in the long run, Elon has alluded to the Model Y could be selling 1 million units per year, but just want to be conservative there. Last thing I have in the model is the Tesla pickup truck, which I have starting production at the tail end of 2022, ramping to about 500,000 units per year by 2024. You may be saying like, wow, that seems like a big ramp. That's a lot of units. To put things in context, Ford sells over 900,000 units of its F-Series pickup trucks in the US alone. Pickup trucks are just a massive untapped market. I think they're gonna have tremendous success there, especially if the specs of their truck are better than diesel and internal combustion engine counterparts. So that is sort of wrapping up, how I think Tesla's vehicle deliveries will trend over the next 6 years. Now, the other very important piece of this slide to mention is revenue per car. And so what I did here is, I added in all of the automotive revenue that they have on their income statement, which is outright automotive sales, automotive leasing, and service revenue and other. So service revenue is when you get your car fixed, and supercharger revenue, I'm guessing, is included in that line too. So basically I combined all of the revenue they had from their auto sales, then divided it by how many cars they delivered that year to get a rough estimate of revenue per car. And as you can see, that was 79,000, almost 80,000 in 2015, 89,000 in 2016, over 103,000 in 2017. There's a ton going on with this number. First of all, Tesla was delivering the Model X in 2016, 2017 in greater volume. That probably bumped up the ASP. Additionally, they were recognizing lease revenue ratably over time. And so that caused sort of a lag in revenue recognition. So that's why the revenue per car was going up. So a ton has gone into this number. And this is a super, super rough estimate. I just want to be very clear with that. Like, you can go way more granular in your financial model of Tesla, but this is just what I use as a back of the napkin math way to figure out what is the general revenue per car to assume, okay, if they deliver this many cars, this many revenue per car, that's how much revenue their automotive business will generate. So as you can see, I have this going down significantly to 85,000 per car, because they're going to be delivering more Model 3s. Now you might be saying like, well, that's way more than the Model 3's ASP. True, but remember, we're including servicing costs. We're including supercharging costs. There's going to be residual lease revenue from other leases that have been done. We have Model S and X revenue, which is still, much higher than 85,000. So a ton of guesswork into this number. In Q1, the revenue per car number worked out to about 99,000. So I feel like I'm giving a big cushion for that to drop dramatically as Model 3 sales increase. And then I have that number trending down and staying flat at about 75,000 in perpetuity, as I kind of see Model Y lower ASP sales as well as semi higher ASP sales balancing out around that level. Tying all that in, that is the line here of auto/truck revenue of how I got to that. And as you can see, this is the main revenue driver for Tesla. I'm assuming that this will be about 90% of Tesla's revenue throughout 2024. In terms of energy revenue, which is the next estimate, here's the data. I did a much simpler sort of back of the nap calculation here, which was I had revenue almost doubling to about 2 billion this year. This assumes about a consistent growth rate with what they report in Q1 of 92%. For 2019, I'm expecting about 3.5 billion in revenue, and that to scale sort of a little bit faster than linearly to about 16 billion in 2024. This is a super rough estimate, frankly. Like, we just don't have that much data on, how big the energy business can get, how fast it can grow. This is a number that I expect to get a lot more accurate with just over time as we watch Tesla's energy business evolve. But this is what I'm expecting now. And remember, Elon Musk has said that Tesla's battery and solar business could eventually be as big as cars, and my model has it never getting anywhere near that. So that is me just trying to be sort of conservative and assume that the energy business doesn't have this explosive growth. In terms of gross margins, so for the auto gross margin, you can see that it took a big hit in 2017 as they were ramping Model 3 production, and I'm assuming that it only barely bounces back in 2018 as the Model 3s become a much bigger portion of the sales mix. I just think it's going to be harder for Tesla to post the gross margin in the 20% range. But I think over time, as they improve manufacturing and they have more scale, they'll be able to ramp up that gross margin back towards the 25% target. In terms of energy gross margin, this has just been all over the place. Gross margin was about 8 or 9% for the energy business in Q1, but that's because A, it was a seasonally weak, B, the Australia project was recognized that quarter. Tesla had to install that super quick. My guess is the gross margins on that were awful, and that dragged down the gross margins of the whole energy business. I don't think that'll continue. But either way, we've seen Tesla's energy gross margin be above 20% historically. I project it'll stay flat at 17%, sort of assuming that as Tesla grows, and their battery prices decrease, the competitive market is just going to continually drop the prices for batteries. Tesla is going to be dropping their prices, but keeping their margin consistent. For SG&A, this is one of the most important parts of the model. Here I'm assuming that Tesla does $3.2 billion in SG&A and $2 billion in R&D. Now this to me is a very aggressive assumption. That's $5.2 billion in operating expenses total. That's an average of, $1.3 billion a quarter or so. Just to put things in context, Tesla did just over $1 billion in operating expenses last quarter, has guided that operating expense growth will be much slower than revenue growth. My entire thesis with Tesla is that they've already built their stores. They already have their R&D unit. The growth in operating expenses here is going to be dramatically lower than revenue growth. That's where we get the leverage in their business model. This is where the fun part comes in. Tesla's operating margin improves sequentially almost every single year as their operating expenses grow much slower than revenue does. This is how I think Tesla's profitability could trend over time if they are trying to sort of maximize earnings. There's a very real possibility that Tesla will continue to announce new initiatives to ramp up spending in the near term for long-term growth. And I'm totally okay with that as a shareholder. So that's a super important thing to understand. But then why did I assume that Tesla will start to be profitable or start trying to make a profit? Because I'm trying to gauge the earnings power of the business. My sort of assumption here is, okay, if Tesla starts trying to make money, starts trying to prove that they can be profitable in 2019 and grow earnings from there, then I think we could see a business that's doing 20 billion in earnings power by 2024. And so I assume some, pretty significant dilution here in the share count, ending up at about 216 million by, 2024. I think that assumes more than a couple capital raises. And as you can see, that gets me to this number of over $100 in operating income per share for Tesla. So this is a stock that, in my opinion, is trading at 2 or 3 times 2024's earnings potential. And that is why I think the company is incredibly cheap. That is why I'm buying it today, because I'm not looking in the rearview mirror. I'm looking at what the company will be doing in the future. And I see a product pipeline that is building up to potentially 100, 150, 200 billion dollars worth of revenue in just the next 5 or 10 years. And when I think Tesla gets to that scale, I think they're going to be generating tens of billion in profit. And this is the backbone of why I think Tesla can become a $500 billion company, potentially even $1 trillion company in the long term. Putting these numbers on paper, although they're probably going to be way off in the long term, I think is really valuable because it shows you just how massive the markets Tesla is attacking are. That wraps it up. Here is the most important chart that I am following from here on out, which is Tesla's annual vehicle deliveries. I see them scaling to over 2 million in 2024. Would love to know what you guys think in the comments below about my Tesla model. Is this off? What are you guys projecting? Leave it in the comments. If you like HyperChange and you want to support, definitely check out our Patreon page for more info on that. Anyway, I'll see you guys next time. Peace.